Ever been in a tight spot financially? Needed a quick fix but worried your credit score wouldn't hold up? Let's face it, building credit takes time, and sometimes life throws unexpected curveballs. That's where companies like Possible Finance step in, offering financial products that seem too good to be true. But the question remains, does Possible actually check your credit? This question pops up a lot, and for good reason. Traditional loans rely heavily on credit scores. A bad score can mean sky-high interest rates, rejection, or getting stuck in a cycle of debt. So, the idea of a loan with no credit check sounds revolutionary. But before we dive into Possible, let's take a step back. Understanding credit checks and how they work is crucial. When you apply for a loan, credit card, or even rent an apartment, a company might pull your credit report. This report contains your credit history, including past loans, credit card balances, and payment behavior. Based on this information, a credit scoring system generates your credit score, a 3-digit number that essentially reflects your creditworthiness. The higher the score, the better. Now, back to Possible. Possible Finance offers two main products, installment loans and a prepaid debit card called the Possible Card, currently in beta. Here's the catch, they claim no credit checks. But how can this be possible, you ask? Instead of relying solely on credit scores, Possible uses a different approach. They focus on your income and banking activity. This means they'll analyze your bank statements, looking at things like your income stability, recurring deposits, and how you manage your finances. So, in essence, Possible doesn't check your credit report in the traditional sense. They have their own set of criteria to determine your eligibility. This can be a huge benefit for people with limited credit history, bad credit, or those rebuilding their credit. But hold on, there's always a catch, right? Here's what you need to consider before jumping into a Possible loan or card. Loan amounts. Possible offers smaller loan amounts, typically ranging from $400 to $800. This might not be suitable for larger financial needs. Fees. While there's no credit check or interest, Possible charges a monthly fee for both the loan and the card. This fee can add up over time, so be sure to factor it into your budget. Building credit with limitations. Possible recently announced they'll start reporting to credit bureaus in early 2024 for the Possible Card. This is a positive step, but it's important to note it's still in beta and might not be widely available yet. Traditional credit cards typically report to all 3 bureaus consistently, which can have a more significant impact on your credit score. So, is Possible right for you? It depends on your situation. If you need a small, short-term loan and your credit score isn't the best, Possible could be an option. However, carefully consider the fees and make sure you can comfortably afford the repayments. Remember, there are other alternatives like secured credit cards or credit builder loans that can also help you build credit while offering more traditional features. The bottom line, Possible offers a unique approach to lending, bypassing credit checks and focusing on income and banking activity. This can be helpful for those with limited credit history, but it comes with its own set of fees and limitations. Always weigh the pros and cons before making a decision. With that said, thanks for watching, and until next time,